Good day. My name's Warren Davison, and I'll be taking you through the PSG Wealth Offshore Solutions Fund Update for December 2021. In the fourth quarter, developed market equities continued to rally, providing investors with the third calendar year in a row of strong positive returns. Strong earnings growth drove equities higher. Fixed income performance over the quarter was flattish, as markets had to digest rising inflation and less easy policy from central banks. The emergence of the highly infectious Omicron variant led to a spike in equity market volatility at the end of November, but markets quickly recovered as data from South Africa and the UK indicated a lower risk of severe disease. Current corporate strength and the prospect of further potential earnings growth in 2022 outweighed the risk factors over the quarter, despite the fact that hospitalizations rose towards the end of the year in several countries. Due to the spread of the Omicron, the first quarter of 2022 could be challenging for the global economy. Continued pandemic-related restrictions could coincide with disappointing economic data. So far, the market has largely been willing to look through the near-term risks, but any further disappointment on the virus front could lead to increased market volatility. Turning to the offshore global portfolios and starting with the assets under management. Looking at the month-on-month growth in AUM for the offshore solutions, we saw a pickup in December to end the 2021 year on a high. The 2021 year was strong for the solutions, recording roughly $511 million of net inflows. Looking at some short-term highlights, diversified funds held up better than their risk-on counterparts. For the GBP funds, the pound strengthened against the greenback, causing the headwind for those funds. We can see this from the above, as none of the funds in the Global Preserver and only one fund in the Global Flexible outperformed respectively. Over the past 2021 year, however, we can see that the underlying manager combination remains strong against the peer groups, with a total of 62% of our underlying managers outperforming their respective peer groups. Looking at the PSG Wealth Risk Radar. For the month, we have 5 funds that appeared on the Quant Radar. For the Global Moderate, we saw BlackRock Global Allocations being a new addition. Turning to the Global Flexible, Baillie Gifford remains on the radar, with 91 Global Macro Allocation being added. And lastly, in the Global Creator, we can see T. Rowe Price and Threadneedle were the 2 new additions for the month. Having a look at the qualitative radar, here we have UBS Strategy Funds Sustainable Growth and Goldman Sachs Global Equity Partners. Both of these funds had a mandate change that allows them to incorporate more ESG factors into their investment philosophy, and therefore, because it's a change in mandate, we will be monitoring these funds over the next 3 months. Turning to the individual fund performance, the Global Preserver had a better month, outperforming the peers by 82 basis points in the dollar class, however underperformed in the pound class by 17 basis points. For the 2021 year, both classes had a great year, delivering 3.68% and 4.12% in absolute returns. The 3-year holding period remained slightly under pressure relative to the peer group. However, looking out over the longer term period, results still remain favorable. Looking at the relative performance over the month, positive excess return was seen from all of our 5 underlying managers. PIMCO Strategic Income was our top performer as value stocks rallied over the month to benefit the solution. Over the 1 year, 91 was the most noticeable detractor in performance, as they remain more defensive in a year which was very uncertain. As they have lagged their peers, we are starting to see pressure in their longer-term numbers, which will need to be assessed. The global moderate had a positive month, outperforming the peers by 56 basis points. For the 2021 year, the fund had an exceptional year, delivering 8.36% in absolute returns, which equates to 110 basis points of alpha over the sector. The 5-year holding period remains strong relative to the peers, producing 98% or 98 basis points of alpha per annum. Looking at the relative performance over the month, Capital Group Global Allocation was the top performer, delivering 2.56% excess return. The rest of the managers were also positive, with the exception of BlackRock Global Funds Global Allocation. Over the past year, the fund remains well positioned with majority managers outperforming. 91 was the biggest laggard, as the defensive style lagged its aggressive peers. The Global Flexible had a negative month in both USD and GBP class. For the 1 year, however, both classes comfortably outperformed the peers, generating 8.8 and 9.86% respectively in absolute returns. The 7-year holding period numbers remained strong relative to the peers, producing 579 basis points per annum of alpha in the USD class. Looking at the relative performance over the month, an interesting month for those funds with more diversification generated positive excess returns, namely HSBC and UBS. We also saw positive excess returns from Royal London and MFS. Baillie Gifford was the noticeable detractor over the 4 trailing periods, and as growth-type companies in Asia have struggled. Over the 1 year, the distribution of positive and negative excess returns is roughly 50-50. However, the stronger upside allowed the Global Flexible to produce 1.04% excess return over the sector. The Global Creator lagged the sector by 1.65% over the month. Basic materials, consumer defensive, and utilities were sectors which outperformed, and the Global Creator has small exposure to these areas. The 1 year period was stellar for equity markets, and the Global Creator reaped the reward. The fund delivered 18.2% in absolute returns and 1.39% of alpha. The 7-year holding period remained strong relative to the peers, producing 322 basis points of alpha per annum. Looking at the relative performance over the month, equity markets saw volatility increase into December, and this can be seen in the solutions. Fundsmith, Nedgroup, Schroders, 91 and iShares delivered positive excess return, whilst T. Rowe Price, Threadneedle and Vulcan being the largest detractors. For the 1 year period, T. Rowe Price stands out as the largest detractor. The fund's exposure to Asia did not play out as it had hoped, and therefore caused the fund to struggle. With all that being said, the peer group rankings remain strong relative to their peers. The 1 year ending December 2021 saw the solutions outperform, with 5 of the 6 funds placing in the second quartile and 1 fund placing first quartile. Over their respective investment horizons, what we can see is 3 funds produced first quartile performance, whilst the lower end of the risk spectrum struggled somewhat. To summarize all of this commentary into our 3 measurable pillars of consistent above average performance at below average risk whilst maintaining a competitive price, we can see here that PSG multi-management are in fact outperforming their 3-pillar approach. Thank you for taking the time. Please take note of the following disclaimer, and we wish you all the best for the 2022 year ahead.